Korea is bracing for a tax hike after the government announced it is in need of revenue to help revive the sluggish local economy, which is not recovering as fast as had hoped. Kim Ji-yeon brings us this report.
The government says it has to collect more taxes in the coming years to cover its rising expenses. The Ministry of Strategy and Finance estimates it has to collect at least $313 billion in tax revenue by the end of next year. It adds this amount will reach an all-time high of $338.4 billion by the end of 2017. The government recently laid out a $327 billion budget proposal for 2016. It contains an increase of 3% that's designed to give the economy a much-needed shot in the arm. The ministry says the sluggish local economy is to blame for the sharp rise in the amount of tax revenue needed, despite a set of aggressive stimulus measures it has employed. That included a spending package of roughly $11.5 billion in July. This as Korea's exports, mainly to China, dropped to $39.3 billion last month, the lowest level in 6 years. At the same time, the amount of household debt has soared, reaching a record high of more than $956 billion in June. In response, the ministry says it'll be more cautious when laying out the budget in the future. First, it'll lower its growth forecast, which serves as an important guideline for spending increases from the current 6% range to 4.2%. It will also make it mandatory for government agencies to adopt a pay-as-you-go system, which will require them to reduce spending in advance for new projects. Kim Ji-yeon, Arirang News.